Hello and welcome to another update video about oil. We look at UK oil, CFDs here, Brent Crude oil. We see a slight recovery, absolutely expected. We talked in the last video about the situation that if we want to turn around here, even if it's only some kind of a relief rally, a temporary turnaround, it would most likely happen here. Yeah, especially if we don't substantially break below $77, because this was a critical support area. The 50% Fibonacci retracement level of this wave one. Here, the retracements to the downside. Remember, a few days ago, we hit my long-term support area where oil can, turn around now at any time, really. Basically end the bear market and get back into a bull run. Now, do I expect it already? No, and it is also way too early to confirm that, okay? So I'm looking at this as a WXY structure to the downside. And the WXY here consists obviously of each of these subwaves consists of an ABC. So we also have in this Y wave an ABC. The C wave for me is still a bit too short, so I'd like it to be a bit longer. And also if I take a look at the target for just the Y wave itself, I can calculate that by taking the length of the wave W, going to the high of the X wave, and an ideal target would be sort of the $60 region, the 1.618 Fibonacci extension. However, we did expect here a temporary reversal, or maybe already getting back into a bull run. Yeah, you need to be ready that as soon as such a especially a long-term support area is reached, that the market is reacting to it. Talked about that in the last video because we had quite a substantial decline here, actually in 5 waves. Yeah, so we talked about that in the last video that, of course, you know, we could say this is certainly, well, not certainly, but most likely gonna go lower. Yeah, but after you have 5 waves complete, you expect at least some kind of a relief rally, because if this indeed is going to go lower in this C wave in 5 waves, then what we've seen here was possibly only the first wave. We're going to move up in a wave 2, we'll come down in a 3, move up in a 4, and come down in 5. That would not be unlikely, okay? So this is how it could play out eventually, and we don't know that yet. Yeah, I mean, you have 5 waves down in C, so it could be done as well. You know, the C wave needs to have 5 waves. We fulfilled the minimum expectations. We came into the support area. Maybe a bull run starts. But I'm not going to confirm that until we break above the yellow channel to the upside. And the reason is that the overall context of this chart still suggests further downside. I mean, let's be honest. If we now reverse to the upside, it reached the long-term expectations and everything's fine, you know. But the C wave is just too short, so it doesn't really add up. It doesn't really fit together. We looked at indicators in the last video. We looked at the daily. Yeah, in the last video, we already saw that we were very, very much oversold on the daily time frame. If I zoom out, we talked about the last few times that we turned around was basically here in November 21. We had a substantial low. We were at a similar level on the daily RSI, so it was only logical to expect a reversal from here. We had a similar situation here back in September 20. We also reached a low. This was not the absolute low. We dropped once more lower and had a bullish divergence, but also this marked generally a significant swing low and we recovered. And the time before that, we were here in April and March 2020. So a substantial low has been reached. So you have to expect some kind of a relief rally, because if the market is that much oversold, you do expect a recovery. Otherwise, the downside potential is limited. Here we were also on the 2-day chart on a similar level as back in December 21, after which we reached new highs here. So yeah, you know, it all suggested upside potential. Also on the 4-hour chart, we were significantly oversold. So I'm happy that we are seeing that. But at the moment, I'm only treating this as a corrective move to the upside. So what I would expect is an ABC pattern, basically moving up in an A wave, coming down in B, moving up in C. Because we are moving in this, I mean, the C wave could become a diagonal pattern because we are in such a clear channel here, and because it's getting towards the end of a downtrend overall, yeah. So target here for a wave 2 could really be that $90 level. I mean, I wouldn't be surprised to go to the top of the channel, to the resistance. In addition to that, that would be also the previous wave 4 high here. And that is often a level where you find resistance in such a pullback. So I'm looking forward to that. I guess the real decision point here would be around that 89 to, well, yeah, $88 and $89 level. Be aware, there will already be resistance at 83.50 because this was a significant swing low here of that wave A low. And also here we had support. So what I can imagine would happen, that's a bit of a roadmap now. We go up in wave A to that 83.50 level. We come down, sorry, in a B wave. Might actually retest here the support and then would move up in a C wave, maybe hit channel resistance and then break down again. That's sort of how I see it at the moment. Of course, a direct breakout would be possible as well. I would consider that more closely if we break above the channel resistance here. And then in what follows, we would also have to break above the B wave high, which is around 100 US dollars. And if we do that, I mean, that would be a really good indication that a low has been made here, a long-term low. But at the moment, it's just following the primary expectation, which is good to see. This is a correction that worked out quite flawlessly. We had sometimes slight pullbacks where they were a bit stronger than expected. Also, this wave B here was a bit weaker than expected. I would have liked to see this C wave of B a little bit higher. But again, all we did was we stayed in the channel. So that allows us now to really define this channel quite nicely. We've got enough touch points down here. We've got a couple of touch points up here. So that would provide an ideal target now for this wave 2 to the upside. And if we look on the lower time frame indicators, I mean, the 4-hour chart, for example, is not overbought in this recovery yet. So this could certainly push a bit higher. Would be basically in line with this expectation that we could reach that $83 and 50 level. Yeah. So I'm looking forward to how that is going to evolve. And then remember, there was an ideal target that I gave you in this video around $60 down here in the support area. But also if I zoom out and we just take a look at the retracements again, because there is one FIB retracement, which is the 61.8% FIB level here in the middle. That's actually at 62.60. So when we dip at some point deeper into this support area, we expect some critical support around that $60 mark, maybe starting at 62. Okay, and that's my update about oil. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.